take this discussion forward and welcome on board a guest to make sense of all that's happening. We have Mr. Madan, the Chief Economist at Bank of Baroda, joining us to discuss all of that. Madan, hi, good afternoon. First up, this has been much talked about in terms of whether India will be included or not. But now brokerage are saying it's a matter of when and not if. How are you viewing this entire setup, and how likely is it in your view that India will be added to the global indices in the month of September itself?
I have a feeling that there's a very good chance of Indian bonds being included in the global indices very soon. And I think what you had mentioned is very true, because with Russia going out, I think there is space for another emerging market. And if you look at India, which seems to be one of the better performing markets for maybe the last decade, and the fact that we have been very consistent when it comes to most of the economic indicators, especially our external sector, and that's one of the reasons why I think global investors would like to have a greater share of the Indian growth story. So that's why we see that there is a lot of interest on that side. There are, of course, certain issues on the taxation front, which I think the Indian government has expressed, that is in terms of capital gains. And that was something which was discussed before the budget. And I think there were large expectations that that would really come through, which would probably provide an additional incentive. But I think we have come a long way from that. We'll, of course, have to see what's the final position of the government of India. But I think from an investor perspective, I think it makes a lot of sense to get into a country like India. And as far as we're concerned, I think there are major gains to be made on account of a balance of payments, because we could be expecting larger sums of money to come in, which will actually shore up our capital account. And currently, we know that CAD is going to be under pressure for the next couple of years, because a growing economy will always have larger imports compared to exports. And we are relying a lot on the capital account. And I think with more funds coming into India, into the Indian bond market, and these will be passive funds. Just remember, unlike equity, which could be very volatile, I think investments in debt tend to be a bit more long-term focused. I think there is a lot of advantage for the Indian markets, not just in terms of investors, but also from the market perspective, in terms of the funds which come in, the way in which the bond yields could generally move downwards, something which even the RBI is working at to make sure that the cost of borrowing for the government remains a bit more acceptable.
Right. So that is one part of it that, that is happening. What does that also do in terms of, recognition, in terms of investments in India? People looking at India, Indian bonds much more than what they used to do earlier. What happens in terms of perception?
In terms of perception, it will give a very boost. I think to begin with, I think while there are these estimates of $20-30 billion coming in, but I think what's more important is the perception. And I think that is something which is going to drive investment in future. And the moment you get included in these bond indices, I think automatically the signal sent is that India is a very important market and you need to have a share of it. So either you invest into the index, or you invest into the bonds and you do the arbitrage between the index and your actual investments in India. And we have seen in India, as far as the FPIs are concerned, I think there is a lot of legroom which has been given for them in the G-Sec market, even in the corporate bond market, which hopefully there will be spillover effects, positive spillover effects, once we see a larger quantum of funds coming into the government securities market.
Madan, that point is taken that we'll see positive spillovers. But I want to go back to the point that you mentioned about some tax changes that the street was expecting to get that euro clear. Now, that hasn't happened yet. Right now, we just got fresh commentary from the finance minister who said that India is still looking positively to get included into that. And she also said that global bond index inclusion will come to its natural conclusion soon. How important do you think is getting that clarity with respect to the tax adjustment, or do you think without it as well, there is a strong chance that India will be added to the global bond fund?
One thing is about the taxation aspects. I think where they want to be, I mean, the government has always battled for a level playing field between domestic and foreign investors. But other issues about in terms of when you're talking of clearance, whether it should be done in Euroclear, whether it should be done in India, I think the problems which are really there, I think the investors may not mind the clearance taking place in India, and we also probably accept the taxation issues because that's a fair thing to accept. But we need to have easier processes in terms of for both registration as well as for settlement. I think that is something which has to be sped up. And I think when the government is giving indications of reaching a logical conclusion, I have a feeling it may not be on a tax issue right now, but definitely in terms of convenience, the ease of doing business, something which the government has been working relentlessly on. I think that's something where we could see certain changes taking place so that foreign investors find it more convenient and have a seamless investment into the country.
And Madan, just before we let you go quickly, do you have any sort of estimate of what kind of inflows could this bring in?
I, I would tend to go along with the street where they're saying 20 to $30 billion, but that may not come immediately. I think let's assume that for 23, 24, we have it. We actually have India included in the global bond index. We could be seeing funds coming in gradually, but probably by 24, 25, we could be looking at something like around $30 billion, which will be quite substantial because it's going to be in debt, not in equity. It's going to be a kind of a stable flow for as far as the balance of payments are concerned.
All right. Thank you so much, Madan, for taking out time for us. Now let's go across to